Hi, it's David Reyes of Reyes Financial Architecture. I want to do a market update. I haven't done one in a little while, and I felt today, of all days, actually was a real important time to do it for obvious reasons. We have the coronavirus that's happening. We'll talk more about that. The market in the last 4 days is down. The Dow is down about 7.6%, down over 5%, I believe about 5.2% year to date. You have the NASDAQ technology stocks, so to speak, down 9%, 10% from their highs, now in correction territory. So you have a lot of things happening with the stock market. It's not, the stock markets don't like uncertainty. And so the uncertainty comes from this whole coronavirus. I have this saying that the market goes stair step up. A typical market will kind of ebb and flow naturally, but elevator shaft down. And you're seeing that happen. Again, I was watching on my screen stocks, I think it was yesterday, and within a 5-minute period, I saw the stock market, the S&P 500, drop 1.5% in 5 minutes. That's a problem. That's volatility. So let's talk about the coronavirus. So far, I think we have 57 cases now in the United States, low number relative to the rest of the United States. We have 80,000 cases total, and we have about 2,700 deaths. It's about a 2% death rate. It's basically what the average flu is, except this isn't the average flu right now, and this is causing problems. We have vaccinations for flus. We don't have a vaccination yet for Corona-19, which is part of a viral flu type of strain. So it's not the first time Corona has come out. It's just, again, a new strain. And I was watching CNBC today, and they had, I think it was a head of the CDC or a representative of the CDC, and they basically said, a pretty serious statement that this is a pandemic. It's going to turn into a pandemic, and the United States is going to be affected. Now, what that means, to health for, Americans and deaths and getting contact with this disease, I don't know. My job is part of that, but also how does that affect markets? And again, markets don't like uncertainty. I mean, to give you an example, gold's up now 8% year to date, while the Dow's down 5%. So what that tells you is there's a lot of fear in the market, and so gold is being bid up, which is really a fear currency, a fear asset, because typically people want to own stocks more than gold. So we're in a situation where you got to be careful. There's lots of risk out there in the market. Also, what's happening, which I think is important to know, is that since this whole Wuhan problem with coronavirus, the Chinese government has injected 1.2 trillion yuan. That's a lot of money, $1.2 trillion yuan into the financial system, where they're actually buying stocks. Pretty serious to hope to basically build a bridge to when this whole thing hopefully blows over, hopefully in the next 3 to 6 months, which happened with SARS back in 2003. My only concern from SARS, which was not that impactful to the stock markets, because we were already coming down from 2000. We were down 45% into 2003. So the market was already sold off significantly. So SARS had a very temporary impact. I think it was down about 10 to 15%, the market when SARS at its bottom. The SARS, issue at its bottom wasn't as big of a problem. We're off now, we're off 7-8% in the last 4 days. And we're also at multi-year highs. Market's extremely overvalued. You have corporate profits that have been falling the last 2 quarters. Market's up 30% in the meantime. There's a lot of divergences. That's not healthy. That's not good. Doesn't mean the market's going to fall apart tomorrow. It's just very high risk right now. There's also a pretty high probability that the Federal Reserve by March is going to reduce interest rates by about 0.25%. And why is this all so important? Well, it's important because you're talking about markets at all-time highs, near all-time highs now, and you're talking about injection of liquidity from the Federal Reserve, $200 billion to help support the financial system, the banking system. You now talk about this 1.2 trillion yuan from the Chinese. Now you're talking about the Federal Reserve reducing interest rates as well. And this is the market at all-time highs, so that's scary. There hasn't been this much liquidity brought in by the Federal Reserve, an increase in their balance sheet, so to speak, since 2008. It surpassed 2008. So the question becomes, why is the Federal Reserve so concerned that they're injecting so much capital into the financial system when we're having a great economy, when the market's so high? That concerns me. That doesn't smell right. So again, I'm concerned. I want to help you if I can. If you want to reach out to me for a second opinion, it's complimentary. For a visit with me, we'll look at the fees you pay, typically reduce your fees. We'll look at the risk that you have in your portfolio. We'll look at a cash flow income plan for you that we'll put together. So if you want to reach out to me, you can call the number on the bottom, go to our website, reyesplan.com. That's REYES plan.com. And I'd love to see you. Take care. David Reyes.